Hello traders, hello everyone. I hope you're doing great. Now, after some time, I have decided again to make one free video. I received a lot of requests recently to make follow updates on Twitter. So rather than posting chart after chart, I just decided to go through some of the recent markets that I have been talking a lot on Twitter lately. So what I will cover first is cable. So as you can see, I will go through a lot of them. So firstly, cable. What I have been looking back this was at the end of August. As if you recall, I was looking for corrective recovery. I noticed that market actually bounced from an interesting support area. So I was looking for the equal rise compared to the previous cycles. It was 600 to 700 pips rally, okay, that I anticipated. So if we take a look now, here you can see that actually this was exactly what happened. Market rallied approximately 600 pips before it turned to the downside. We have seen a nice move into the previous resistance area. So not only that, I have also identified a wedge pattern and also posted this on Twitter as well. I said that we may see a reversal because after all I noticed that there were a lot of overlaps, okay, in this third leg of recovery. So with an overlapping price action in the third leg, moving into these 600-700 pips resistance levels based on that equal legs measurement, I was quite bearish actually back then. Okay, so you can see that we have seen a very nice move to the downside. Now we are testing this lower trend line support. If we can break this through with a daily close, decisive daily close below this trend line, then I would probably look for this to be wave 3. But this pair may really move invertly with the dollar index. I see dollar index at the potential resistance, euro dollar at the potential support. So if euro dollar would rise, I would not be surprised if maybe this after all was wave X on cable. However, for a bullish continuation into more complex rise of this wave 2, you would definitely need a rise above this swing or swing spike high if you want at 1.3 or 1.3, 110 or so. Okay. Also, what I want to look at here is why I was actually expecting a reversal is because, as I said earlier, it was quite overlapping recovery here. And if you take a look here at this RSI, okay, you can actually see that we had a divergence, and you will notice that despite a very strong move to the upside, the RSI was not that bullish. Okay, so this was just some kind of a confirmation that maybe after all we have been forming wave C back then. And so far you can see a very nice move to the downside. I have also been looking for this bearish setup for a while, but now it's just at some, as I said, very important do or die levels. This could easily be just another ABC decline within more complex corrective recovery, especially if euro dollar will move to the downside, to the upside. Now let's take a look also on the next market, which will be DAX with the S&P. So actually on DAX I have been identifying potential FIB support levels back then at the start of September. So I was looking at the WXY correction, double zigzag actually, and expecting a turn to the upside. So if we take a look what has happened since then, you can actually see this was ABC X ABC that I was tracking. You can actually see a very nice reversal to the upside. I thought that wave A could actually recently reach these levels at the previous wave B swing high, but this did not happen. So it looks like that we are now in a wave B correction. So watch out for 61.8% FIB level, maybe 50% to retest and then turn higher for a wave C rise. Okay, so overall, I still think that this consolidation on a daily chart is not done yet, and that we are probably forming a triangle pattern A, B, C, D. So if that's the case, watch out for a rise towards the upper side of this trend line before market turns again lower. Now there's also an alternate scenario which suggests that maybe we are forming an ending diagonal for wave C. So it's not really the idea which pattern is going to be the case. You know, we have to, both patterns after all are corrective, they're still incomplete, so we really have to be careful here. Okay, but the idea is that we are trapped in consolidation within uptrend, that sooner or later we will see a new break higher. Okay, now let's take a look on the next market, which will be the euro dollar coverage. Okay, so here is euro dollar. I have been tracking actually two wave counts, but my primary wave count was still a flat correction for wave B. So despite the recent move into a resistance area, I have been looking for a potential reversal down into wave C, an aggressive one, and even this one suggested that sooner or later euro dollar bulls will slow down. Okay, so what we have seen so far is a very nice drop, actually since last week, very nice reversal to the downside, back to 1.15 levels. We are also at 61.8% of wave A, okay, not of a whole recovery, so this is a key. So now it's a do or die level. If we'll see a reversal to the upside here in impulsive fashion, then of course there can be actually some interesting long opportunities to catch wave C higher. If this will not be the case, then, well, maybe actually corrective rise on euro dollar already is done at September highs. So this week will be very important for the euro dollar. Okay, personally, I'm a very patient trader. I want to see a bounce in impulsive fashion before I may look for potential long opportunities. So here is hourly chart. We can see a very nice 5 waves of decline, very close to these fib support levels that I identified earlier. Also posted this on Twitter. So what would I have to see here is probably a rise in 5 waves back to the area of a former wave 4. Now this would then be some kind of a confirmation that at least we are making a 3 wave rise. So even if this would be an ABC recovery, there still can be some room to make money on the long side if the first leg would be very strong and impulsive, as said. Very important, back to the area of a former wave 4. Okay, also watch out daily candlesticks formations. Now, as you can see, this is very aggressive fall, so that's why I want to see my confirmation. Because of aggressive decline, I don't want to be smart here, too smart, and try to call a low here or be long already here. But I want to see a confirmation. If we will see some kind of a very strong daily candlestick formation and the rise back above 1.16, then obviously this would be could be a very nice candlestick confirmation for our Elliott wave count. Okay. Also, if we take a look on the next market, is actually Euro Aussie. As you know, I have been looking for longs on Euro Aussie. Unfortunately, this didn't play out well. So here's actually the wave count that I was looking at. I was expecting a continuation higher, clearly because of 3 waves of decline. Okay, but this market came to the downside when euro dollar turned lower into wave C. So now when euro dollar stabilized, if will stabilize, maybe now it can be again interesting for euro Aussie to find the support. So if we take a look on the updated count, what I see here is still some kind of overlapping price action, overlapping decline. It can be corrective. So if we can break the upper channel resistance line, then this would probably be a new confirmation that after all this was a corrective decline, but more complex than I thought in the first place, and that we are headed to the upside. So I'm watching this one as well. This pair is also can be supported, can be trading on the bullish side, especially if stocks would come maybe to the downside. So what I'm looking at on the S&P 500, I will show you this one as well, is actually potential ending diagonal. Okay, here, so this ending diagonal, this wedge pattern could suggest that in this month we could be switching to the bearish side, at least for a temporary 3 wave corrective pullback. And I will show you also these 2 different wave counts here that I'm tracking. The first wave count is actually the idea that we are here rising, making a 3 wave recovery for a wave B, black wave B. Okay, so this can be temporized, which means this can be actually a very big flat correction, 335. So what I want to see here, what we need to see here before we may switch or turn bearish, is a completed 5 wave movement within wave C, and that's not the case yet. Okay, so for now this trend remains clearly bullish as long as we are below that invalidation level. And I also have this very bullish wave count, which suggests that actually this was a triangle and a fourth wave, and that we are now making a 5-wave rise. Okay, so this one obviously is bullish as well, but what is interesting is that both suggest that we will see sooner or later a corrective wave 4, and maybe that's the time when Euro Aussie could really experience a bounce. Okay, so for the near term, what is important on the S&P 500 really is this wedge shape on the 4-hour chart. So watch out for potential strong push to the upside, and then watch out a reversal. So if this resistance around 2960 would hold, then I really think that price could come down into this wave 4 to maybe to even retest these old swing highs, as you can see. Okay. Also, now let's take a look on the next market, which I will follow through, is actually dollar Swiss. As you know, I was looking here for potential low in place because of a wedge shape here at the end of a very strong move, which is normally indication that sooner or later we will turn. So if we take a look on the update here, you can see that market actually moved very aggressively to the upside. I have firstly been looking to the starting point of this wedge, which was here at 97.68, but you can see that this swing high was broken out very strongly. So clearly this is some kind of a change of trend. So I'm looking for more upside, but we may see a pullback here, and this pullback could actually take us much lower, especially if we consider if euro dollar maybe stabilizes and will find a support and then rally into this big wave C towards 1.19 level or so. Then it means that actually dollar Swiss during this time, this phase could make a 3-wave corrective setback. Okay, but the idea is that after all, this was a very big 3-wave setback on a daily time frame. Okay, also notice that we have found a support at 61.8%, and if you will also take a look at the Swiss market index, okay, stocks in Switzerland, then actually you will see that there is a bullish pattern. So actually this bullish pattern played out already some time ago before dollar Swiss bounce. So actually that bullish pattern told me that maybe dollar Swiss will bounce, but maybe with a delay. Okay, so investors went from out from Swiss franc into this Swiss index. So actually this one is clearly showing a very bullish setup, and I would not be surprised if we see a retest of parity maybe even this month. Okay, and now let's take a look on another one which I posted today. It's a gold. I said that we have seen a very nice 5-wave rise from the lows and a very slow pullback. Okay, very choppy moves from this swing highs back to 61.8% from where we bounced on Friday. So actually this is a very nice bullish pattern, and actually you can see that gold is now breaking very strongly to the upside, and ideally we are now making a wave C rise. So if I give you better perspective now, wave C rise can be very similar in distance compared to wave A. So you take distance of wave A measured from end of wave C, and 1230 is actually ideal area. Okay, also as I see right now, that was this old swing high, so maybe this can be retested, and clearly this looks like a breakout, a very strong rise in a very short period of time. So watch out for daily close price. If we will stay above these levels, around these levels, then I really think that we are headed much higher this week. Also on this longer term daily time frame, actually what I see is potential wave E. Now wave E sometimes can be very small, sometimes can be very big. Okay, but the idea is that wave E should be also made by 3 waves, like each corrective leg within a triangle. So I'm looking for more upside here, maybe a retest of this old swing high. Once again, it comes at 1235. Okay, so it really would not be surprised for me if we see a retest of these levels. Also, if you try to forget this wave count, that we are in a wave E, and let's say that we are that we are looking at this wave count, 1, 2, 3, 4, 5, okay, then you would still anticipate more upside, since wave 4 is again a corrective leg, right? So even different wave count, different perspectives suggest that we may see some more upside and then turn to the downside, okay? And what is really exciting about this one is that actually gold, today's very nice bullish move, can be telling us that maybe dollar index will come down from resistance, and actually the euro dollar could find a bit, okay? So watch out for this price action. I really would not be surprised if we see another sell-off on dollar index, okay? So traders, I think I covered everything. Let me check. No, I just want to look again at crude oil. This one is the last one actually. So crude oil, I posted this one as well. I said that maybe there is a rise towards $80 per barrel. So what is going on? Well, we are seeing a very nice rise for the last week or so. We have seen a break out of this triangle formation. So look like it appears that we are in the final stages of this wave 3 or wave C. We don't know which wave it is, but so far there is room for even $80 per barrel. Notice that this head and shoulders target is actually even higher at 85. So clearly there is room for more upside. Now this on a daily chart, a triangle projection actually suggests that first one at 76, second one is at 81. So daily chart and weekly chart and head and shoulders combinations and even 61.8% FIB retracement on the weekly chart suggests that there is actually this rise coming into very nice interesting area. So once we are trading around $80 per barrel, watch out for potential reversal to the downside, okay? Traders, thank you very much for your attention. If you enjoyed this video, please check our website. We also have a trial available to new members. We also cover digital currency service. So if you're tracking Bitcoin, Ethereum, Ripple, whatever, check this service. You will have 14 days access for only €2, and also, of course, FX charts and other correlated very important markets for €1 for 14 days. Okay, so make sure to check this out. If not, just follow us on Twitter. I'm sure we will continue to share some very useful charts. Okay, thank you very much. Bye.